Hello?
Yeah.
Yeah.
Can you see my screen?
You're not recording my face, right?
Yeah.
Yeah, you are recording or you're not recording?
Yeah, don't worry. You're handsome. Don't worry about that.
Oh, come on, man.
Right?
No, really.
You will get likes from all the people, right? So don't worry.
No. I don't want that, man. I don't want to be on YouTube and all those things.
I see.
But I'm not kidding. I don't want that. How to stop? Okay. Abhi, cut.
Okay. Do you see my screen?
Again, it went very small.
You may have to, can you expand it?
1 second. Huh? Mm. Yeah, I expanded it. Okay, yeah, I see those charts.
Yeah.
Our voice is good enough, man.
Whose voice? My voice?
Both our voices are good enough.
Good now?
Good enough, yeah.
Okay, very good. Excellent. So, do you see this chart?
Yeah.
Okay. So let me just give you briefly. Remember, I was telling you a couple of days back that S&P 500, right? It's
Right.
closed Friday on 405. You see that 407 almost, right? And this is the Bollinger Band, the upper band and the lower band, right? It's almost hitting the upper band, right? So if you see this was the bottom in December. December last week of 22nd December market was down. 375 was S&P. And then in the last 5 to 6 weeks, it has been going up consistently. Now it's 407.92, right? If you look into, say, for example, long-term chart, then 430 was the all-time high, latest high in August time frame, right? 430, 435. So the expectation is that market should start. Maybe this is where it can go, 405, 410, and from here is going to have a big resistance and it start coming down again. Okay, so that's what I'm expecting, that 410, 411. So say like 5 point more, it can go up, and then after that it will start coming down.
So you mean past April, or
say again?
When you say 410, you're saying around April 10th time, or is it
No, 410 points. So S&P right now is 400. It's almost there, 407. So you're thinking about maybe it might go 1 or 2% more, 2 to 3%. That's the top I'm expecting.
Okay.
And then it will start retracing again. It might go back to 390, 390 range. Okay. So how best to use that information? And that's the reason I was telling you that SQQ is the right one to buy now. Okay, let me get the SQQ chart here. So if you look at the SQQ here, this is what it is. It's 30. You see here 38. That's the bottom, right? From Friday, and it has gone down Friday because market was up. So SQQ is reverse of the market, inverse of the market, and 3 times leverage. So you have to be very careful. That's the reason position sizing is very important. Okay, let me give the 20 days 1 hour chart, right? So see here, in last 20 days, SQQ from 50, it has come to 38, right? And just because market has been going up in last 20 days, if I go a little bit more, say like 20 days, do they have 180 days, 6 months, right? So see that in 6 months, it has come back to where it was 6 months back, right? So what I want you to do is, again, this is my advice. I'm not a professional advisor. So you start building the position in SQQ. Start writing the put on SQQ. Okay. So if you write the put on SQQ, right, it's right now is 38, right? And if you say like you sell the put for 38 itself at the money, right? Or maybe 1 point below, maybe 60 delta or 65 delta, 80 delta, you can sell the 80 delta, right? So we'll get around $1, right?
Mhm.
So start with, I would say go aggressive, start with 5, right?
Mhm.
And if it further goes down, because it's market might go a little bit up, I just say like S&P might go 2% more,
Mhm.
right? Then SQQ will go back to 35. Then we go to 35, then sell more. So you can either do 3 now and 2 after a couple of days if you see SQQ further going down, right? So 5, and then the worst come worst, you can go back to like maybe 33, 32, right? That was the
Lowest.
the
Yeah.
chart here, right? Worst come worst, I think maybe
But at 32, the sell put is nothing.
no, I mean I don't think, yeah, 30 seems like, see, last 6 months if I look into the chart, it's the bottom. I would go aggressive on SQQ now. Market has to reverse,
Mhm.
right? So last 6 months, market has been going up. I'm expecting it to reverse. But the position sizing is important. So maybe you can start with 3 now and then 2, right?
Okay.
Okay. So what else?
So that's one, right?
That's one.
So how is your SQQ doing currently?
I
The one.
again, as I said, like position sizing is important, right? So
Right.
right. Mine is I started writing the put when it was 45.
Oh, okay.
Okay. So let me start with another stock. Yeah.
Yeah. Let's
Let me
move
check another stock. Probably I think SOXS. This is the inverse, 3 times inverse of semiconductor index, right? Same thing. What you can do probably is maybe this also you can start looking into that now.
Is it SOX S or SOX L?
L is the long side,
Uh-huh.
and S is the short side.
Short. Okay.
Right. Yeah. So let's say 180 days. See, 180 days, everything is way too low now, right?
Mm.
Because market has gone up. These are all inverse of that.
Mm.
Right. Here, what you can do is that sell the put as well as you can buy some SOXS and sell the call on that. Right.
So buy some
and sell the call on that. So you buy it, I'm expecting it to go up, right? So buy and sell the call on that. So you get the put the call. So like if you try SOXS, let's see SOXS, and here February, not the Feb 23, Feb 3rd, right? Feb 3rd, okay, Feb 3rd. So if you buy for $23, right? And you sell the $23 call or 24 call, say 25 call, maybe that will be better. Yeah. So you'll get $1 from the call, $1 premium from the call, and it will make $1 in the stock too.
So sell the put around at 25, you're saying?
Sell the put for 23, a little bit more conservative, maybe 22. Sell the put for 22, buy the stock at 23.5 and sell the call for 25.
Okay. So these are all going down because the market is up.
Market is up, yeah.
Okay.
Right. Another thing I was telling you, the LABD, right? Labu, inverse of Labu, right?
Right.
So Labu, LABD is inverse of Labu, but leave that one. I think SOXS is better one. I mean, or the SQQ.
Compared to the Labu.
Yeah.
Okay. That's good. So this should Tesla closed at about 176 last week.
Tesla, see, I'm not a big fan of Tesla stock, right? Because very unpredictable. I don't know what's happening in Tesla. So let's see Tesla, all right?
It's at like 176.
So Tesla is trading at 170, somewhere 177 range, right? It's too much money to invest. 170, 17,000 if you buy what 100 share. So that's a
Right.
lot.
That's a lot, yeah. And if you get assigned and stuck with it, and
Yeah.
it can drop to 150 or 140 also.
Correct. You can go back to the 100 range. Let me look at the chart of Tesla, right? Holy moly, see that? It was just what 100. Oh well, that's 1 day. It's 5 minutes. Look into this. 20 days. See here. From 126 to 176. This is just the air.
Yeah.
This is what they call the balloon, right? It's going to burst.
Yeah.
And at least it's going to touch 160 for sure.
Yeah.
I mean, I can teach you iron condor, right? So, but that's advanced level of option trading, right? So in iron condor, just to give you briefly, what we do is what you can do is you know the Tesla is not going to go further up. It has already gone up a lot. So probably sell 180, 190 call, right? If you sell this 190 call, it's going to give you $4.60, right? But
there's
it's
a premium to it, right? There might be a premium to it. If you do not have Tesla shares, how can you sell it?
That's what I'm telling you. So you can sell this 190 call without owning the Tesla, and you buy the 200, say like 200 call, 2.65. Okay. So this is called the credit debit spread. No, the credit spread. So you sell 190 call, you will get $4.60, right? And you buy $200 call, so you have to pay $2.60. So $1.50 roughly, how much? 462. $2 roughly your profit.
All right.
You already make $2. But the stock has to stay below 190. Right? And which is very likelihood. It's not going to go, it has already gone up so drastically last couple of weeks. All right. So this could be another trade you can think about that. But your risk is 10,000, 190 to 200, right? The maximum risk is your $10,000, and you're making a profit of 2,000 on that. So risk to reward ratio is not favorable, right? You're going to lose all 10,000 and you're going to make 2,000, right? But likelihood is very high. Right? Probability of being the successful this trade is high because I don't think Tesla is going to go to 190 or above. Right? So that's called the credit spread, where you don't have to put the $200,000 to buy to sell the call. So what you do is sell one call and buy another one, which is a couple of strike away from the first one.
Right. So what are the other ones which are in like 100, 110 range, which are, even though if you get assigned, you're okay?
See, one thing also you have to be careful is the next week is FOMC rate decisions, right? That could turn the market totally in either direction, right? Right. Amazon is not bad. I mean, Amazon is very stable. If you go for the stable one, you can go. How is Walmart? But Walmart premium will not be there. If you go and Walmart, you do, right? Even at 143, 144, you're not going to get a lot. See?
How much is it?
I would suggest if something is trading around 100, well, but then at least $3 to $4 should be their premium. But that's monthly, right? So that you have at least, so your goal is what? 1% weekly minimum or 2% weekly. 1% weekly, if you make consistently, then you have like almost 50% return, right? 50 weeks.
Right.
So on this 144 is giving $1.20, which is roughly 1%, right? less than 1%. Yeah, 1%, close to 1%.
Mm.
Right. But
Walmart.
yeah.
Hmm.
But these are stable, right? You know, these are not going anywhere. You're not going to fluctuate a lot, right? If I look into the Walmart chart here, let's see, not 1 minute, say 20-day, 1 hour, say 180-day. What is this candlestick?
The screen is frozen or
No, I was just trying to see that.
looking something? Okay.
Yeah, 136. It has. Let's stay with SQQ for the time being.
Okay. Okay.
Yeah, and SOXS,
Those two.
those two. Let me find it out. Other to see quickly. Where is my here? Do you see this screen? Yahoo
Not yet. It's spinning.
now?
Now I see it.
Okay. So I have a separate portfolio which is just for covered call, right? And so remember Tesla was telling you it's very costly, right? Tesla
Right.
has an ETF on its own. Single share ETF is called TSL.
Uh-huh.
So since Tesla needs a lot of money, like 100, now 160, right?
Mm.
You can, if you want to play Tesla, you can play using this ETF, which is TSL, which is similar to Tesla. So 1.2%. So 120% more than Tesla. So Tesla goes by $10, this will go by $12.
Uh-huh.
No, sorry. If Tesla goes by 10%, this will go by 12%.
So that's the ETF for Tesla.
That's ETF for Tesla, right? So we are expecting the Tesla to go down. You can play the option. You can sell. You can buy the put of this TSL.
And it's trading at what?
1267.
Okay. But how does premium
It doesn't have much premium,
mhm.
right? So, but they must have the opposite of TSL. Let me see if it is TS. Yeah, TSLA, bull, TSLL. Okay, no, this is bull, right? Extend daily. That was the TSLL. Here, TSLS. This is what you can do. Okay, this is better.
TSLS?
LS. So this is the inverse of Tesla, right? So our theory is that Tesla should start going down, right? So this TSLS will start going up. You can start selling the put on this and you can collect the premium. TSLS, right? And it has, seems like put is active, right? It's trading at 32, so price range is also not that bad. But it has monthly put, you see that? Doesn't have weekly put.
Oh, okay.
Okay. But look, you can sell $29 put, you will collect somewhere around one bid is 1, ask is 2, maybe midpoint 1.5, you can collect here, right? So that will be 5% in in 2 weeks from now, February 17th.
Okay.
Right.
Mhm.
Other way you can do is that since it's going to go up, probably you can buy, wait for a week, let it from 32 go to 35, and then you can start $37 call. You start selling $37 call on that.
Okay. Okay.
Okay, but just watch these stocks for the timing. Get familiar. Do you see
Right.
what's the chart pattern is? What is the resistance and the support level? And then
Hmm.
we can discuss more.
Yeah, definitely. This is good stuff. At
Yeah.
least for the next week.
Yeah, next week. Right.
Okay.
Okay. If you're interested in biotech,
I have not.
no. Just keep on watch on this one, CDTX. Right.
CDX.
Cidara Therapeutics.
Uh-huh.
Making a drug, right? But
Mhm.
I don't really care about what kind of drug it's making and whether the drug is going to be successful, blockbuster or not, right?
Right.
But the
Mhm.
thing is that it's like penny stocks trading for $1.20, and just on Friday or Thursday, the advisory committee, if you see your news, advisory committee gave 14-1, voted 14-1 in favor of approving the drug for this company.
Mhm.
There is very likelihood that this company drug is going to be approved, right? And that approval date is March 22. You see here,
Mhm.
right? FDA decision expected by March 23. So by March 23, this drug is going to get approved. I'm expecting that since the drug advisory committee voted in favor of drug 14-1, means 14 committee members said yes, good drug is good. One said no, right? So there's very high likelihood that this drug is going to be approved on March 22.
Mhm.
Okay. So March 22 is roughly around a month and a half, 7 weeks, right?
Right.
You can expect in 7 weeks this price of 1.2, right, to reach up to, let me see, what is the 5-year maximum? You can go 3.69, even not even 3.6, then this level, which is 2.66, right? 2.6, 2.3. So even from 1.2 to 2.3, I was making like close to 100%, I'm fine, right?
Right. Right. Mhm.
So you can just put 1,000, it's not a lot of money, and then leave it.
Mhm. For this one.
Yeah. Right. In 6 weeks, it will double it.
Right. If it goes to that 2.3.
It will go. It will take time, but it will go.
Okay. Okay.
Right. You will
I
see
don't
like
know.
maybe sometime in mid-Feb, end of February, it will start moving up. Right. And you keep an eye on the volume. See, the volume has started going up. Right.
The trading volume. Okay.
Yeah. So volume is 1.5 million versus average is 1.0. So it's already started going up. So people will they will buy it first, accumulate it, and then suddenly bump the price.
Right. Right.
Right. And it's a small company, 86 million market cap is not a lot, even if it doubles the price, it's like what, 150 million. That's very tiny company. So it's easy to manipulate for most of the people, right? With such a small company, anybody with say like 10 million capital, they can make the price go suddenly 50% up or 50% down.
Down. Yeah.
Yeah.
So currently it's trading at 121. Okay.
Right. So, but otherwise, I wouldn't advise you to go biotech. Biotech is very, very risky.
Okay. Very volatile. Okay.
Right. Yeah, it could go, it can triple 4 times the money, but also it could lose all of the money at the same
All
time.
of the money too. Right.
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 So
We don't want that much.
no, you don't want that. Okay.
This is good, man.
This is good, right?
Yeah. So when are you coming to the gym?
I will be,
Or you want to skip, you said?
no, I may come today,
Oh,
right?
okay.
Around, say around 2 o'clock.
4?
Jim,
4 o'clock, you said.
2 o'clock, 2 o'clock. 4
Oh,
o'clock, I
2
have to
o'clock.
go out,
Oh.
meet someone. So,
Oh, okay.
Right.
Yeah. Yeah, if I'm there, I'll ping you.
say again?
You said 2 o'clock, right? If I'm around that time over there, I'll ping you.
Sure. Yeah.
Right. Thank you.
Okay then.
Yeah,
Yeah.
okay.
Take care.
Yeah.
Okay.
Take care.
Bye.